So it's hard to see, I know, but if we zoom in here, we can see that the pre-market data, again, is showing us. And I can actually go to the intraday chart here and flip over to extended hours. And we can see, again, right here, we are trading lower in the pre-market. Closed in this range here. We're now trading down here. Now, the interesting thing that I'm going to be watching, folks, is if we zoom out on this, look at where we are compared to yesterday. So the first and foremost thing, as a technician, what am I looking for today? Well, here's yesterday's low right there, okay? Do we take it out today? Or do we close above this level? So on a daily basis, do we make a closing lower low? If we do, now you have 2 consecutive down days with significance with a lower close on the second down day. That would be something that I would pay attention to. We don't know yet. I won't know until 4 p.m. today. Tune into Trading the Close with 𝗟𝘃𝗃𝗃𝗃. We'll talk about it. I'm going to be on there today. Okay, so that's number one. Looking at the chart on the daily chart, quickly going over this. What do we see here? Well, we knew that we were into lots of resistance. It seemed like the market would never go down into the end of the year. As I explained yesterday, I think there were a lot of people that probably wanted to sell but didn't want to pay taxes in 2023, so they pushed it off to this year. I do think you're seeing some of that continuing to play out today. I also think that there's starting to be new fears out there. Yields are starting to go up. The dollar's starting to go up. Those are signals of rotation into safer assets, right? Being more careful. You're rotating into these type of things, being more, again, aware of the extracurricular global geopolitical picture out there. All right, so again, if we continue to pull back on this chart on the spiders, where would a downside reasonable target be? And the answer is pretty simple here, right? You start basically doing your fibs, and what I do, and this is exactly play-by-play, how I decipher this. So when I see a massive move up like this, and again, we know that the NASDAQ biggest move since 1999 last year. S&P, not quite the biggest one, but nonetheless, still impressive move. So let's do our Fibonacci levels here, and we take it to the highest point. And what I do here is I say, okay, here's my fibs, and now in terms of a pullback, is there any Fibonacci level that aligns with a previous pivot point on the chart? And for instance, one of the things that I would pay attention to, for instance, right? So you have this high here, and then you have this high right here. Okay, so those are 2 major pivots generally in the same location. The question again is, do they align with anything? And you can see right here, they do align with the 382 and the 236. So in general, I would start saying right in this vicinity, here is where your likely pullback is. That's between 460 on the SPY and 452. Now, what that does is it gives us a general target for a pullback early in the year before buyers likely will step up. All right, but again, square, look at the trend line. I talked about this in the game plan as well. This was actually a couple months ago now. This is, by the way, the weekly chart. But look at the move into that trend line. Again, beautiful move into that trend line. Look at the bounce. And then I actually went short this with members of InTheMoneyStocks.com's verified investing alerts because look at the move up right into double top. Ridiculous. This stock was trading at $40. It went to $80 in a matter of basically 2 months. That's straight up. That is not normal. All right, again, markets generally, they can be abnormal, they can be irrational for periods of time. Eventually, rational thinking comes back. And when you have a move of 100% in a multi-billion-dollar company, there's going to be some check back. Now, does it mean that I don't like the company? No, I couldn't frankly care less about the company. Investors and traders, shorter-term traders, they don't care. We don't care. I don't care about Tesla. I don't care about Apple. I'm in it to trade the charts. I'll go long, I'll go short, I'll go long, I'll go short. That's fine with me. It's overall looking at the chart and just being logical and saying double top, look at all those green weekly candles, you're going to have a little bit of a check back. And surely today it's down another $3, even not showing on this chart. All right, guys, so much to talk about.